Okay, good evening, guys. It's Simon Campbell here from the IX Trader Show, and we're about to enjoy our first webinar presentation from the event which took place last Friday in London. So if you were there, fantastic. It was good to meet you. Hopefully I got to meet you. If you weren't there, don't despair, because we've got all the content coming over the next couple of months for you from some of the speakers that took part on the main stage at the event. Tonight, we're going to be welcoming Marcus de Maria, who's the founder of the Investment Mastery business, and we are looking at cryptocurrencies this evening. We are about 1 minute away from starting. I've just turned it on live for the moment to make sure that everybody was happy that we're in the right place, so you can see someone speaking and not panic that you're going to miss the webinar. This is being recorded as well, so if you're watching on the replay, which I know a lot of you do, welcome, and you can pause and rewind as much as you want, and hopefully fast forward over my blurb at the start and get straight into it. So you're in the right place. You should be looking at the white slide that says Cryptocurrencies Simplified, How to Build a Fortune in the Next 12 Months. You can see a picture of me. I haven't got my lights on, sadly, tonight, so apologies for that. Underneath me, very nicely lit up, is Marcus de Maria. Marcus, good evening.
Good evening. Hi, Simon, and hi, everybody. Great to be here.
Fantastic. You sound loud and clear to me, but just to check, could those of you on the webinar just give me a sort of a yes or everything okay, anything in the chat box to let us know that you can hear and see both Marcus and myself just before we get started. So just using that. There we are, Madeline. Thank you. That's great. Oh, great. Paul. Oh, Paul, you're here. Hi, Russell. All good, fantastic. So we're all good. I will hand over the floor to Marcus. I will step back and reduce my picture. Please do use the chat box for any questions that you might have throughout the presentation. Marcus might not respond to them immediately. We might leave them to the end. We've got about a 45-minute session with about 15 minutes at the end for Q&A. So unless it's something urgent, use the chat box. I'll be monitoring and replying to as much as I can to help. But if it's questions specific to the content, we might wait and then we'll go back. But we will actually go back and address all the questions at the end. So great. Chris, hello to you. Anis, Paul, Russell, everybody here. Fantastic. Thanks for joining us. Marcus, I'll hand over to you.
Thank you so much again, Simon, and it's great to see so many of you here. I remember when I first started 25 years ago. It's very exciting. I know some of you are new to this, some of you not so new. We actually sponsored the Crypto Corner because I think, to be talking about trading and investing without cryptos is like trying to create wealth by climbing up Mount Kilimanjaro or Mount Everest without an oxygen mask. It's possible, but why would you do it? Why would you do it when you have cryptocurrencies? So it's all about education, I think, and that's why you're here. Okay, a little bit about me. I've been investing for 25 years. I'm the author of 3 wealth creation books. The second one is what I'm most known for, which is The Lunchtime Trader. And behind that is the idea that you mustn't, or you don't have to spend hours a day trading and investing. And we like to say 20 minutes is all that you need. So we do slightly longer time frames and we let the market do the work. This is very important because I once came home, it was cold outside, it was warm inside, and I kind of placed a trade and I kind of fell asleep. I woke up and I don't know how long it was afterwards, but it was a good time. It was a good little snooze. This was not a power nap. And I woke up and I looked at my position and I had made more money in that time than I had the previous 3 weeks before. And I just thought, right, okay, what's the learning here? There must be one. And one of them, I'm sure there were lots, but one of them was let the market do the work. Let the market allow its space to move. I know some people like to trade, get in, get out, and they get a buzz out of it. And that's great. But I personally, and I'm only talking about myself, really realized that I need to allow the market to do that work. And especially in cryptos, that's definitely the case, right? If you get too close with stop losses, it's just going to take you out. It's going to whipsaw you out. I got into cryptos relatively late. 2017 in April was my very, very first investment in something called Ethereum Classic. I'm still up 200 and something or 300% on that, but I was up a lot more at one stage. And I still managed to make a lot of money through that. I made millions, many millions actually. I mean, we're talking about almost double figures, millions in cryptos. And the reason I want to share this with you is that, well, Simon asked me to do this talk to you because of how important cryptos is, but it's made so much money for me. I just wouldn't want you to miss out on this opportunity. So look, in 2016 was when I first looked at it, but I was very cynical about it, right? I didn't really want to know about it. And so I had, and I'm sure you can add your own reasons in the chat, but I said, like, why invest in something that isn't tangible? You know, it's a scam. Who's Satoshi Nakamoto? The government surely is going to shut it down. 14 years later, of course, they can't shut it down unless they shut down the internet. Regulation will hem it in, but we need regulation. That's very, very important. And, you know, with the exchange traded funds, the institutions are now able to get in. And I've got a slide on that later, but that was very, very important. What I'm doing is working. Why do something else? I mean, I literally told people not to get into cryptos in 2016 until somebody asked me, but why not? Give me a solid reason. And I just didn't have one. So I literally had to do a deep dive. And I actually ended up writing a book about that. That was my third book. How about this one? This is a good one. I don't really get it, and I don't invest in things I don't understand. Listen, these are all great reasons, I can only talk from my own personal experience. But I know that I left $80 million on the table by not being open. I was closed until that wonderful person asked me that question. Yeah, but why not? Give me a real, tell me why not? You know, just because you don't understand it. Okay, fine. Did my research. Oh my goodness! But then I went in, and I went in quite hard. Not as hard as I have in the last few years, but at the beginning, yeah. So let's go into part one, which is really. But I'm going to do this very quickly because I think we're not. 4 years ago I would have had to go into real depth, whereas now people understand cryptos a little bit more. But it's really just the next stage of evolution of money. That's one way of looking at it. We used to barter things, then we turned to gold, but gold bars are very expensive and hard to carry around. So they chopped them up into little gold coins, which are still expensive. And then they started introducing copper, and now there's hardly any gold in there at all. Still heavy though. So they introduced paper money. Also easier to print as well. And then plastic cards, because that's even easier. You have to carry wads of money around, to electronic money. And that's the system we're in right now, because the money in the bank right now isn't real, is it? I mean, if you a lot of people say, oh, I don't like all this electronic stuff, but your money, if you went into the bank right now, your money wouldn't be there. They'd well, it depends how much you want to take out. But if it's over 50,000 or 100,000, they'd ask you to come back in a couple of days. And I just want to say that at every single stage of evolution, people fought against it. The metal coin people didn't want to go to paper money. You must be joking. Paper money. The paper money people didn't want to go to plastic. You must be kidding me. Plastic. And the plastic people did not want to go to electronic money. And it's exactly the same with cryptocurrencies as well. People don't like change. We all know that. But there are 3 reasons why cryptos are being adopted at double the speed of the internet back in the 90s. In the 90s, the internet was growing at 64% a year, but the cryptocurrency adoption is growing at 113% a year, so almost double. Now, why is that? Well, there's 3 reasons. You might want to write them down. Number 1 is it's much safer, because if you have your money in the bank, it isn't yours. And if you lose it, let's say you're a business and you have 5 million in there, well, the government's going to give you back 100,000, and that's it. So you've basically lost the majority of it. So when it goes bankrupt, that's where the word came from, banks going bankrupt, your money's gone. Here, if you have your key and you have it in a hard wallet, it is safe, it is yours, nobody can take it away from you. It also can't be inflated, it can't be deflated, it can't be confiscated, it's yours. That's quite important, because there have been attempts to take people's gold, for example, because they wanted gold in order to pay for wars and things like that. And funnily enough, nothing's changed. They are still fighting each other, which is quite incredible. The second reason, in no particular orders, it's just so much faster. Instead of it taking 3 to 5 days, yes, it still does nowadays, especially if you're getting it abroad and they have one bank and then it needs to, and that's the intermittent bank, and then going to another bank. It can take 3 to 5 days. Well, with cryptos, depending on which network you take, like the Tron network, for example, it'll literally take 3 to 5 minutes. Now, days to minutes, that's a big, big improvement. And the final reason is it's so much cheaper. If you're really sending a lot of money abroad, well, you've got the currency exchange, then you've got the fees. You don't have any of that. You don't have the currency exchange because it's going to be from one coin wallet to the same coin wallet. That's important. Bitcoin to Bitcoin. You can't send Bitcoin to Bitcoin Cash. That's a different crypto. Ethereum to Ethereum, Solana to Solana. So as long as the wallets are the same, you can send it for about $1. Maybe it costs a little bit more sometimes depending on who you use, but it doesn't matter whether it's, £1,000 or whether it's £10,000 or £100,000. It'll still just cost you just a very, very small amount of money. Unless you're using Ethereum, of course, in which case it costs a lot of money. So you've got to know which ones to use. So it's safer, it's faster, and it's cheaper. What is there not to like? And that is why the adoption is growing so fast. And it really is a new and powerful currency that can't be manipulated or inflated. We've got inflation. Where did inflation come from? Was it from you or me? The answer is no, it wasn't. And it's basically leverages or levers that are being pulled by the central banks and the Feds and things like that all around the world. And that is because the current system is a centralized system, whereas the new system is decentralized. I'll give you an example. If you were to send money over the traditional TradFi, people call it traditional finance, there's always somebody in the middle, in the middle of you two, whether it's PayPal or a Visa card, MasterCard, or a bank. And of course, they want to get paid. They're not going to do it for free. So that's important because it has to be minus £100 from your account plus £100 to the other account. But in the new system, there's no central authority. In fact, in the decentralized system, instead of one entity, like a PayPal, there are 17,000 of these so-called miners. You might have heard about the miners, the Bitcoin miners, and each one of them has your transaction on their computer. Every single one of them is totally transparent. People think it's not transparent. That is false. It is totally transparent. In fact, if you were using the Bitcoin network in order to do or some kind of nefarious activities, you'd be stupid to do that because all they have to do is follow the trail, and then when it goes to your bank, boom, that's when they catch you. So, don't even bother, and why would you? So decentralized, 17,000 instead of one. That's very, very important indeed. By the way, if you want to know what the blockchain actually is, all it really is, do you know that £100 that I just sent to somebody? That's just a transaction, and that has its own number. So the number is written there. Maybe you want to send somebody to somebody else. Maybe you're a migrant worker who maybe wants to send money over to your family. And that is recorded here as well. They don't know who you are because it's encrypted, but they do know the amount. They do know the address that it came from and that it went to. They don't know who the owner is because that's the privacy that you might want. You may not want it, but if you want it, that's what it affords. And as soon as all these transactions fill up one block and it's full, well, guess what? A new block is formed. But the last few digits of the last block and the first few digits of the first block are linked together, and that is why through a chain called the blockchain. So it's literally blocks of work that are being undertaken. That's really all it is. And let me tell you, just in case you think this is new, it's been going on for 14 years and it's only increasing behind the scenes. You don't realize that it's happening, but anything to do with digital currency, you're talking about trillions of dollars and pounds here. Record keeping, you're talking about trillions here. Securities. Just in the equity market alone, we're talking about absolute trillions, because you might not be able to afford, let's say, one share in Google, for example, unless it has a stock split or something like that, or a, I don't know, anything that is like thousands of pounds. Unless it has a stock split, you're not going to be able to afford it. But everything is being tokenized at the moment, meaning that you'll be able to buy £1 worth of stocks if you wanted to. Private markets, you've got debt, crowdfunding, we're talking about trillions. and these things called smart contracts. One thing, I mean, might be of interest is that people think of tokens and coins, and I'm going to show you the difference between the two in just a moment. But it's not money. It's actually programmable technology, and it can actually do things. It's not just a coin. You know, there's a coin. It doesn't really do much apart from an exchange of value. These actually do things like smart contracts. I'm not going to go into that now, but just to let you know that money will be faster and cheaper to transfer globally. The whole kind of record keeping, you'll be able to know where did the leather come from the Louis Vuitton, how long was the meat transported, sold, are the bananas really fresh, are they not, right to the supermarket. That is all tracked via the blockchain. The blockchain is an incredible tracking tool, which is why would you use it for illegal activities? That would be absolutely stupid to do. That it's actually used to track things. So for example, do you want to know whether you might want some medicine, and then suddenly you're thinking, well, I really would like to pay only half the medicine. It's really expensive. You go on halfthemedicine.com and you see your medicine there. How do you know it's real? You need to be able, and that's why you can track all along the way. Where did it come from? Where was it sourced? Was it organic? Is it not? Etc. and so forth. And it's immutable. It can't be changed on the blockchain. Title records, yes, in our country, of course, we have the land registry. You can prove this is my property, this is my land. In many countries, there is no such thing. There's bits of papers floating around. They're illegible. They're half burnt, half coffee spit. So people can't actually prove that it's theirs. And governments and companies are taking elderly people from their land and are literally driving them 6 hours somewhere, taking their land and just throwing them away. If it was on an immutable blockchain, which can't be changed, it's on the blockchain, they would be able to do that. Not a piece of paper. It's ridiculous. Okay, giving you a few examples here. So for example, Facebook and Google, people think it's free. Is it free? It's not free. Of course it's not free. They gather our data and then they send it and sell it to other people. So they're making money out of us. They send it to the marketing and advertising companies. So all of these things you'll be able to avoid if you wanted to with the blockchain. I cannot believe that we just voted, and they're going to vote obviously in the States. They're going to do it with a bit of paper. I cannot believe that in this day and age we still do that, when you can do this very safely on the blockchain. Literally, if it's snowing outside, people won't vote. They will not exercise their democratic right, even though people died. Probably their relatives died in wars in order to be free, but they will not because it's too cold. Well, okay, let's do it very safely, very effectively by pressing a button on the blockchain. So the reason I'm going through these, by the way, is to give you an idea that it's not just one thing. There are so many use cases for the blockchain. And the latest one is that everything is being tokenized. What does that mean? It's being digitalized into tokens. Imagine even a building or a painting. The real one still exists. But then what is created digitally is a digital twin of the real thing. So let's take the Mona Lisa, one of the most famous paintings in the world. It'll still be hanging in the Louvre. You can still see it, but you will have a digital twin, which is exactly the same, just digitalized. And you will be able to buy, because you can't buy the Mona Lisa. You definitely can't buy a piece of the Mona Lisa. How can you do that? You'll have to cut it up. It'll be destroyed. But you can digitalize it, like a picture of it, and then you could buy a piece of the lip. Now, let me ask you a question. Do you think that there are enough billionaires and millionaires in this world that would buy or want to buy or be part of an exclusive club where they have a piece of the Mona Lisa and they can prove that they own it because it's on the blockchain, and they'd be willing to pay hundreds of thousands for a tiny piece of it because there's only 100 pieces? They'll probably pay £1 million for it. In fact, in 2019, somebody bought the first digital rose, picture of a rose, right? But it was the first one, you see, which was digitalized, put on the blockchain, and it was sold for, what do you think? How much do you think it was sold for? £1 million. Why? Because it was the first one. If you go back in the art world and you look at some of the paintings, white on white, and you think, white on white? Well, it's just white. Yes, but this was 1936, and to do that in 1936 was revolutionary. And that painting is worth there's nothing on it, is worth so much more now. So you can buy a fraction of digital art collectibles. By the way, when you were young, did you collect little cars, like football cars and stuff like that? Exactly the same thing, Pokemon, but you can do that on the blockchain. Okay? You don't have to have the physical collection anymore, which is absolutely fantastic. And what it does is it allows people from third world country who they can't even set a bank account up in the current system because it's just not worth it for the banks. They're too busy making money every time we breathe in and breathe out. They're just making money left, right, and center from us. They're not going to bother going into some of these countries. But guess what? These people do have money, maybe not enough for the banks, but they do have money, and they do have the internet, and they do have mobile phones. And that means they can get onto the blockchain and they can start buying a little piece of art for maybe $200 or something like that, and which means that they can actually start getting and creating wealth. So in summary, it's a decentralized, faster, cheaper way to do what? Well, to store money, to send money, to track money, but also to prove ownership of unique digital assets or anything that can be tokenized, like art, collectibles, stocks, property. All property, by the way, will be tokenized because property is just sitting there and that's it. And it can be rented, but it's just there. And now finance has found a way of tokenizing it. So there's a secondary market to buy and sell pieces of that property as well. So humanity is always coming up with better and faster ways in order to do things. Now, you can buy into an application that sits on top of the blockchain. Think Facebook is an application, right? It sits on top of the internet. Well, think of a decentralized application like a D-app, like a game, for example, that sits on top of the internet, and the internet of the blockchain is called the blockchain. So you can buy into the blockchain itself to own part of the internet. So you can try to find the next app. For example, Axie Infinity was a game. It went up 4,000% in 9 months. People around the world were using it, and they were earning money through playing it. You can do that, or you can buy into the underlying infrastructure, the internet, right, on which it sits. That is the blockchain. Now, buying into the blockchain is like buying part of the internet early on in the 90s. So I've got a question for you. You could make money there, but how many of you would have loved to have bought a piece of the internet back in the 90s, which you couldn't do, and earn a tiny, 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 tiny fraction of every single transaction that people do on the internet? I mean, the answer has got to be yes, please, hasn't it? Well, you couldn't do that then, but now you can buy a token or a coin, and I'll tell you what the difference is in just a moment, of the blockchain. And as the blockchain grows, the value of the tokens grow, so you can profit from it. The way, before we look at this, the way to think about this very simply is every time, well, how many films have you watched on Netflix? Now imagine that they would have given you, let's say, 10 coins. They're worth nothing. They're worth 0.01 of a pence or something, right? Nothing. Every time you bought something on Amazon, you got 10 tokens, worth nothing, 0.1. But then as Facebook, as Amazon, all of these things, you got 10,000 of these useless coins, but then suddenly they went public as the companies did. Now there is a value to it. And not only that, as then people got in and used it even more, the value of it grew even more. Suddenly, you're using Google, and let's say it's 1,000 or 2,000 or 3,000 pounds, or like for one token, you've got 10,000 of these because you've been using them for the last few years. That's what we're talking about. Because I had to laugh when I heard this. On Facebook isn't the product. We're the product. We're the product. Facebook needs us. Without us, it doesn't work. So offers it for free and then sells us our data, we're the product, to the advertisers, which is brilliant, which is absolutely brilliant. But therefore, we should be given a fraction of that as well. It shouldn't all go to Mark Zuckerberg, who's a multi-billionaire. We should also have some tokens as well. That's basically what we're talking about here. So it kind of flips everything on its head. The value is captured in the underlying, not the application. All right, let's have a look at some coins. But first, what is a coin? Well, very simple. A coin is a digital asset that has its own blockchain. So if you talk about Ethereum, for example, ETH is the coin, and the blockchain is Ethereum. A crypto token is a digital asset that does not have its own blockchain. Okay, that is the difference between the two, just in case you were wondering. Okay, so if you wanted to look at, let's say, 21,000 of these different cryptocurrencies, you can go to coinmarketcap.com, and I'm here to tell you two things. One, they're in order of market capitalization, which you probably know is the price times the amount, the circulating supply that is out there. If you add those up, then you have a market capitalization. You can see Bitcoin number one, Ethereum number two. And the other thing I wanted to tell you is, out of these 20,000+ coins, most of them are scams. They're just people who just decided that they are going to. I mean, there's even one called shitcoin. I mean, literally. I mean, there was one called Scam Coin, and people bought it, by the way. It just beggars belief. Honestly, sometimes I do wonder. But so anybody can set up a coin, anybody can, which is good if you have good intentions, but also if you don't, maybe it has no utility at all, whereas these do have a utility. So Bitcoin, the oldest, the grandfather, 2008, 2010 was the first transaction. It's the safest, but also the slowest one that is out there. Ethereum, which now it has moved from proof of work to proof of stake, which means that it's almost entirely electricity free. For those people that say, oh, but it's really bad for the environment. Well, give it a chance. It's only been going for 14 years, but also over 56% now is used, not using traditional kind of electricity and things like that. For example, in El Salvador, they are actually using the power of a volcano to mine their Bitcoin, just to give you an example. In Ethereum, most of the applications that were created, the DApps, the decentralized applications, were on the Ethereum blockchain. BNB, just quickly, by the way, Tether, USDC, they're stable coins. They're not an investment. They will never change. They'll always be worth about $1. So you don't want to invest in those. BNB, if anybody wants to know what are the biggest exchanges out there, BNB is one of the biggest. That's Binance. And obviously you've heard of Coinbase, for example. But I tell you what I really like about BNB is that every time you use it to pay for your trading, buying and selling, they burn a part of it, and that means there's less and less BNB in circulation every single day, which is really clever, because that means leads to scarcity. And if supply is constant, it means the price goes up over time. I mean, I put $2,000 into BNB when I first heard about it. I turned that into $620,000, and it went up 31,000%. So that was quite something. Solana, you might have heard of. It is now the fastest blockchain out there, and the adoption is absolutely crazy. And as it's moving up, and it looks like it is going to be the Ethereum killer. I just moved some of my Ethereum, and because Ethereum is what I started with, but moving more and more into Solana. So just to give you some ideas, these are not recommendations of the kind of things that are out there. The reason, by the way, that's so important is because it does 50,000 transactions per second. If Bitcoin does around 5, Ethereum does around 25 per second, Solana does 50,000, and a Visa card will do 35,000 transactions per second. So if you're going to have a cryptocurrency, a currency that people are using, you need the transactions to be fast, because you don't want to be buying a coffee and waiting 10 minutes for the transaction to go through. It has to be instantaneous. Well, Solana seems to be one that is doing the best at the moment. But what's missing for 99% of people is a strategy with clearly defined rules. So I'm going to do that next. I'm going to be going through the strategy that made me around $8 million. But I will encourage you to take lots of notes at that stage. So if you do have a proven strategy, then that's great. But if you don't, people tend to choose the cheapest crypto, the one that's 0.00001. That is just the wrong strategy. I can't even tell you how wrong that is, because it depends on how many of them are. It's about market capitalization. They buy it now because they have the money. They put the same amount in each crypto. If you're a trader, you know that that is not the way to go. They get out when it goes up, but they stay in and panic when it falls, even selling. So we do the opposite. You need to know which crypto to buy and why. What's the use case? Is it really solving a problem? When to invest? What price do I invest? I'm not going to buy it now. Why would I buy it now? It's really high. It's just shot up 100%. Why would I buy it now? And of course, most people do get in when it shoots up 100%. I prefer when it's down 50% personally, but each to their own. How much to invest? How much to invest, on each trade, and when to exit at a small loss and when to exit with a big gain. Now, as a trader, I'm hoping that you agree that this is 5 rules that you should know before getting into any trade. Like before you buy something, you need to know when you're getting out. You can't go in and then go, well, let's see what happens, because emotions will prevail, and we don't want that to happen ever. So here's the strategy that I use to make $8 million using this strategy. Now, there's 5 strategies actually that we have in your crypto club. Get in early into startup coins and offerings. We have a kind of a buyers club that allows us to get in really early. We've had 5 coins that went up over 2,500%, which was great. We would never have been able to get in alone without the buyers club, because they want a lot of money to get in at a discount, and we don't want to put that kind of money in to a total startup. Thank you very much. No, thank you. But if everybody pours, let's say $100 together, we can get in. Investing using crypto cost averaging, that's the one I'm going to go through. You receive free money, dividends, like stocks, they receive free dividends. Here it's called staking. We also have a trading strategy as well for those of you who are interested. And then another way is just to buy companies that are taking advantage of the blockchain technology, like Coinbase, for example, which is a public company. You can buy Coinbase. And we've done very well with our Coinbase positions. Myself, my partner, my 2 children, we've all done extremely well on that. But the one I'm going to really go into just in the time that we have is really this one here, because everybody can start using it. So now I know that you're probably traders, you like going in and out, etc. I'm going to invite you to, on the side, start doing something which I call active investing. So it's not trading, but it's also not investing. We're not just looking for the long term. Let's just wait to see what happens. Hell, if something goes up 500%, I'm starting to get out. I might not kill the cow, but I'm definitely milking the cow all the way up. So this is a great strategy to use, and I'm going to take you on a bit of a journey now, instead of going straight into it. So, for example, most people use something called dollar cost averaging, where they put the same amount of money in, on the first day of every month or the last day of every month, £100 here, £100 there. It could be £1,000, by the way, or £10,000. It doesn't matter, but the same amount of money. And after 12 months, they're going to get an average price, aren't they? Because they went at the top, they went at the bottom, went in the middle. Very, very easy. Invest every month, same amount of money to get an average price over time. Okay. It's a very well-known strategy, but extremely lazy. I mean, you can't get lazier than this. I mean, we have 10-year-olds that I would say can do better than this strategy in the club, together with their parents. They're not in the club by themselves. Even better would be to use this. Why don't we do this? Why don't we invest, but only in the months where the price has come down? Why? So that I lower my average price. I don't want to have a high average price. If I did that, I would just invest here, and I'd have an average price of around 12,000. If I now invest here, I now have an average price of about 11,500. I've brought down my average price. Does that make sense? Yeah, I hope that makes sense. I'm not looking at the chat right now, but I'm sure Simon is looking at it. So just write in the chat, does this make sense, or ask any question, and I'll be happy to come back to it. So every month, I'm only going to invest if the price goes down compared to last month, which is the case here. So here, on this one here, November, the price has actually gone up. So I'm not going to get in. In the previous one, I did get in, but here I'm not going to get in. Why? Because it raises my average price. I don't want to raise my average price. What I want to do is I want to get into a crypto which has fallen, which is why I'm not going to get into these two, but I'm going to get into this one, and I am going to get into this one. So very simple rules, which is don't invest if it goes up, but do invest if it goes down. Okay, so that's very, very simple, and that will allow me to get an even lower average price, because remember on the last one it was 11.5. Well, I didn't get into all of these, so now my average price, especially if I went down here, is probably closer to about 9,000 now or something like that. So that's a lot better than 12,000 as an average price. And really, I'm not spending any time at all on this. This is great if you want to start some really, really effective strategies, for example, with your family or your children. Absolutely fantastic. Even better, though, would be to do this strategy: to invest when it has fallen, same as last time, but notice the little plus here, a little plus sign here. I'm going to add a little bit more money to it. Now, we're not going to double the money, right? We're not into the martingale strategy. We're not going to go to the casinos for 100, 200, 400, 800, 1,600, 3,200, 6,400. We're not stupid. We're not going to do that. But how about 25% more, just to lower that average price just a tiny little bit more? So for example, you might get in here with 100 or 1,000, doesn't really matter. And the next time you add 25% to it, so it'll be 125, right? Or if it's 1,000, it'll be 1,250. Does that make sense? The next time it'll be 156 or 1,560. Why? Because it's 25% more than the previous one. This one will be 194 or 1,940. Why? Because it's 25% more. So can you see, I'm kind of like trying to get my average price down without being stupid, and I'm definitely not investing here. By the way, what do I do in the months where it's gone up? I don't want to invest in this crypto because that's going to raise my average price. So some people say, well, you could sell, but the other thing that you could do is just to go into a different crypto that has fallen compared to last month, because this is all about, you might want to write this down, this is about you getting your money to work smart, right? So it's not about you working harder. Allow the market to do the work. You will be shocked pleasantly at the movement that can happen here. Because if I tell you here from March, right, April, May, let's say, okay, let's say 2 months. Okay, this thing has gone from around 4,000 to 8,000, 100%. When they move, they move. Okay, so that's why we want a little bit of time in the market, not timing the market. Okay, I am going to invest if it comes down compared to last month, even add a little bit more, but I'm not going to invest when it goes up. I'm going to put my money in to work hard, which does not mean raising my average price. It means going into another coin to lower my average price, right? This is very, very simple, but, and this is important, to get a much, much lower average price over time, you have to only do this in cryptos where you've really done your research. So stay with the top ones on the coinmarketcap.com, which I just showed you. Do not go to number 21,000 down there, because then you're gambling. I mean, please don't do that. Now, what we teach in the club is this. What we say is, please don't invest until you see it not just falling, but really having fallen substantially from a recent high. Here's the recent high. I want a massive, massive fall. Because why? Because I never want to buy at the top. What I want to do is I want to buy when it has fallen substantially. I'm now, by the way, if I bought here, I'm immediately in profit here, but I'm not ready yet. I want more. So what I'm going to do is I'm going to wait, and I'm going to buy again here. Now, why? Is it because it's fallen compared to last month? No. It's because it's fallen sufficiently compared to the last time I entered. Now, remember I told you about our money working hard for us. Do you remember me telling you that? If you invest here and invest here, the person up here, his average price is 12,000. Well, guess what? My average price, if I bought the same amount here and here, is probably around 6,500. But because I invested a little bit more, like 25%, for example, guess what? My average price probably is more towards the 6,000 or 5,500. And then look what happened. From 5,500, it went to 10,000. That is a huge gain. And what did I do? Nothing. I waited patiently. Now, I understand you're traders and you want to get in and out. What I'm suggesting is that's great, but I always do both. Make sure you do both. Have your trading, but also have your investing as well, because sometimes your trading will outperform. But I'm telling you, especially if you know about the cycle, this will outperform everything. Well, not everything, because I don't know your results, but most things that you have done, especially if you do it with cryptocurrencies. Word of warning, always do it with the safest of cryptos. And in your crypto club, we always show you the ones that we are investing into. So this is my CoinStats account, which has, which kind of with APIs brings in all my different accounts, whether it's on Binance or KuCoin or Bittrex or some of these, and some of my, these are hard wallets. By the way, if you don't know about cryptos, you do need to know that you need to get your money off the exchanges as soon as you possibly can and get them into hard wallet. Then they're yours. If the exchange crashes, it goes bankrupt, it doesn't matter, you have your coin. So you can't, how can you do that? Outside of a broker, normally you have to leave your money with a broker. Here you don't, you take it out and still have the coins. Now, more importantly than me making money, 88% of our clients make a profit investing in cryptos using this strategy. Just very quickly, like Tracy M, for example, made 8,000 profit in 2 months and counting. And that's important because you'll be using this strategy for the rest of your life. If I were you, I would get my kids, get your family involved with this, brothers and sisters, do it together, because it really is a fantastic thing to do. They might not want to be trading maybe like you, but they will certainly be wanting to do this. This is Tom Carr. He is actually a rapid response officer. So he goes around with rifles, and he doesn't want to be doing this for the rest of his life. He wants to do something very safely. Tom turned his initial 1,500 into 45,000 in just 2 years. And what was so good about this is what he always used to look forward to the end of the month. Why? Because he got paid so he could spend his money. That's what most people do. They look forward to it. Now he looks forward to his money, not to spend it, but to invest it. And you can see the difference here. He had very, very little beforehand. Tracy H made, let's see, this is important. If you're a business owner, you can actually open a SaaS. It's like a pension, but not a SIP, not a self-invested pension, but a SaaS for business owners, and buy actual real cryptos within that, which is fantastic. And she's made 90,000 on that. In 2 years, she made 115,000 and counting. She is just starting, which is amazing. And through compounding, as you know, it's just insane. It's just absolutely insane. Now, in the time that we have, we don't have that much time to go through every single thing, but just to let you know that we do trade cryptos as well, using any kind of an oscillator. You can use the MACD in that oscillator setting. You can use the TSV in the oscillator. You can use the RSI. You can use stochastics, whatever you want. But we're really looking at the oversold. That's what we're looking for. So the lower part here. And it's a very, very quick, short-term thing that we do where we get in. Let me give you an example here. Hopefully you can see this. When this one here, and this is actually using the RSI, the Relative Strength Index, when it goes below the 30 mark, that's our first entry point. Now, we do it slightly differently, I think, than to most people, because we're not trying necessarily, although sometimes this takes hours, you're in and out for a quick 5%. We're not trying to necessarily time the market. I find timing the market it's a great holy grail. It's brilliant, isn't it? But if you can, amazing. But we do our best. But if it doesn't matter. We have several entry points, I think, and that's what my 25 years of experience has taught me, which is you don't need to time the market. Okay, so we would be getting in at this point here. It either goes up 5% or it doesn't. Now, if it does, obviously we start getting out. How do we do that? By putting our stop loss in place and allowing it to run, or it comes out. We never just get out. That's insane. If it's going up, maybe it carries on going up further. You would never just get out. You use a stop loss. But if the indicator goes above the mark and goes back down again, as it did here, look at the arrow here, went above, then went below the 30 mark again. We would get in again, lowering our price. Now, if it just went up 5%, it went up 4% here, so we didn't get out. I mean, 4% is not bad, but we're aiming for 5. So then we would get in again, and there are certain rules to this. It needs to have fallen more than 5%. There are a couple of rules to this. I'm just explaining the basics. But if it goes above again and below again, we would get in again to lower our average price if the 5% hasn't yet happened. Now, this strategy is so powerful. There's only one time in the last 4 years that we actually stayed in longer than a month. That's how powerful this strategy actually is. And here are our results all the way from January 2018 is when we started the conceptualization of this. Then we went on a demo account for 4 months, and then we went live. So this, all you see here is all live money. Everything is live money here. It's a very, very powerful strategy, and we're up 50% already. And so we've matched last year. Okay, I'm not going to go through too much of this. Let me just have a look at the time, make sure we're still on track. We've got about a quarter of an hour. We want to make sure we get some questions in as well. But I do just want to quickly let you know that, we are very, very early, because in terms of the adoption cycle, I think you'd agree we're very early, but it is starting to be adopted because the institutions are starting to get in. So I wouldn't wait too long. You've still got this massive amount of market share, but as soon as the majority come in, the 68%, you want to be coming in before, not after they do that. So you still have a little bit of time, but not too much, because the next 14 months is what it's all about. From the date of this recording, it's the next this is live, by the way, but the next 14 months from now is very, very important, because the amount of institutional money pouring in is ridiculous. I've got some slides on that. In 80 days that the ETFs were allowed, you've got to understand, institutions were not allowed to buy cryptocurrency. It was illegal. They weren't allowed to buy it until the 9 ETFs were launched, and then a further few in Hong Kong as well. Well, guess what? 5% is what they bought of all the available Bitcoin. They hoovered up 5%. That is now off the table. You can't buy it anymore. It's gone. Well, that's scary in 80 days. And there's no sign of this decreasing. I think it's just going to speed up. And the ETNs, a version of the ETFs, is coming to the London Stock Exchange as well, which is pretty big as well, bigger than Hong Kong. So that's going to be interesting when that happens. And all I can say is, don't wait too long, because there are only a finite amount of Bitcoin available. 21 million, and 4 million were lost at the beginning because people didn't really take it very seriously. But the proof, you need proof, right? 91% of institutions said that they want to have at least 0.5% of their portfolio allocated. What does this mean? Well, 0.5%, and by the way, it's at least, and that's within 1 year. What about year 2, year 3, year 5, year 10? You're lucky that you're still watching this now, because if we wait too long, they're literally, it's going to be too late. Look, there's 200 trillion of this institutional money. 10% is 20, and 1% is 2 trillion, and 0.5% is 1 trillion. There is 1 trillion minimum, and just in the next 12 months looking to get in. So these are facts, and you have to decide now what you want to do. You can either say, oh, that's nice, or you can say, blimey, I better get in here. So look, 21 million ever mined. This brings scarcity. It's written in the protocol. There can never be more. But euros and dollars are being printed. What did we hear just now? China is starting to print money again. Here we go again. We can't help ourselves. But, and this is kind of the final slide before we go on to the end here, which is, and this is the most important slide, the amount of Bitcoin that goes into the market via the miners. It's the miners. They mine the Bitcoin. That's how they're paid. They make sure the transactions are all verified. Everything's in order on the blockchain. And as a result, they get paid in Bitcoin. Okay, now they would like to keep the Bitcoin, but they can't, because they've got costs. They've got staff. They've got buildings. They've got electricity. They've got software. They've got costs. So they have to sell the Bitcoin in order to keep running. But what if I told you that the remuneration that they got is halved every 4 years? Every 4 years. This is akin to, imagine gold, the amount of gold that is being mined, right, is halved every 4 years. So let's say I halve it now. I say, guys, I'm the gold minister. I'm going to halve the amount of gold that's being mined. You go, blimey, there's only going to be half the amount available. Yes, but 4 years later, we're going to halve that again. And then 4 years later, we're going to halve that again. And we're going to keep halving it until there is no more Bitcoin. What do you think logically must happen to the price of Bitcoin if demand is the same, but supply is going down? I'm going to give you a couple because it needs to come from you. It's no good me telling you this and you go, oh, yeah. And then you just carry on with your day. No. What do you think happens if we only built half the amount of properties, of buildings, of houses in the UK, and every 4 years we halve that number again? And then once that low numbers, we halve it again. So now it's half. What is going to happen if the supply goes down, but the demand is constant? What happens to the price? The price has to go up. We don't know when, but it has to go up eventually. But I'm telling you that the demand is growing. So you have, because of the institutions, they bought up 5% in 80 days. Boom, 5% was gone. Whoa, okay, gosh, took a long time for the first 5% to go, but they just did it in 80 days. How did that happen? Okay, wow, okay. Now, what do you think happens if supply goes down and demand goes up? And this is why I am going in big time. My family is in, my children are in, my friends are in, everybody in the club, your crypto club, everybody is in, because you can't deny that supply and demand. I'm sorry, you just can't. You can say all kinds of things, but supply and demand is. And by the way, what happens after the halvening? Well, there's always a 9-month delay, but then this happens. We're talking about thousands of percents, by the way. We're not talking about hundreds, thousands of percent in 2017. Bitcoin went from 1,000 to 20,000 in 9 months. Here it went from 3,500 to 68,000, right? 20 times. Well, guess what? We're here right now. What's going to happen next? Can I guarantee it? No. Have I put millions in waiting for this? Yes. So am I putting my money where my mouth is? Yes, I am. But you need to make a decision. Is this something that you might want to look at? Is it something you want to learn more about? Did I say put all your money in? No, you don't need to do what I'm doing. But is it worth allocating something to it? You need to decide. Another way of looking at this is, because it's a 4-year cycle, it's up year, down year. Up year, down year. Up year, down year. Up year. That's why I said the next 14 months are so important, because the halving happened earlier in the year. And there are companies, there are institutions hoovering Bitcoin up because they've done their research. Have you done your research? Question mark. I didn't. I missed out on 80 million. I did a deep dive. I apologized to people. I wrote a book about it, and I'm in. We're going to make a lot of money with Bitcoin, but in the club, we're looking at where is the next Bitcoin, where's the next Ethereum, where's the next Cardano, where's the next Chainlink, where's the next XRP? Because when Bitcoin goes up 100%, some of them go up thousands of percent. And I told you my BNB went up 31,000%. I'm looking for more BNBs. Obviously, I am putting less money into those and more into the stable, not stable coins. Sorry, I shouldn't have said that. More into the big ones, not stable, because stable coins mean something very, very specific. So listen, thank you so much for listening. I'm sure we have some questions that I'd love to answer. But in the meantime, please do scan to download the Lunchtime Investor. Now, the Lunchtime Investor is a really easy 24-page that I've written for you to make sure that you really do understand the ins and outs of cryptocurrencies a little bit more. So I go into a little bit more depth than I did in the last 45 minutes. It's a very simple read. It's only 24 pages. You need to, by the way, some people take photos of this. You do go on your camera, but you scan it. You hold it still in front of the QR code, then a link will go up. You press on the link, and then you are able to download the Lunchtime Investor. So thank you very much. I hope that you learned something from this and that you're going to take action on this, whatever that might be, not least to download the Lunchtime Investor. If you are interested in a longer session, we've got a 6-hour session coming up on Saturday, for example. We don't run them very often. We'll send that to you as well. Maybe you want to talk to one of my team. I don't know, but let's start here, the Lunchtime Investor. So thank you so much, and over to you, Simon, if you're there. I'm sure you are.
Thank you, Marcus.
Great.
Amazing. Of course, I sat through as much as I could on Friday at the live show in London, but I didn't really get a chance to see the slides because I was sitting sort of behind the screen. So it's been nice to be a viewer and see the slide. That slide, I think, that really captured my interest is the 4-year cycle.
This one.
Yeah.
This one. Well, this one, right, together with what's happened in the past. Of course, the past doesn't equal the future, but it certainly rhymes, doesn't it? And this one here, it's the 4-year cycle. It's written into the program. The whole idea is that there's scarcity. It's an answer to fiat currency, which is not linked to anything, has no real value, and they print more and more and more and more of it. That's the whole idea behind it. It is against that, because the money in our pockets that we work so hard for is worth less and less and less every single day. So yeah.
It's amazing. One of the points, I'm not sure if you mentioned it already this evening, but something you talked about on Friday was the way to invest into, I think it was a Coinbase, which is a PLC listed company.
Yeah. I did mention it. I can mention it again. So there are certain stocks that are taking advantage. That was number 5 of the 5 different things that we do. Stocks that are just taking advantage of the blockchain, but are on the stock market. So Coinbase, for example, is a regulated asset on the New York Stock Exchange. You've also got MSTR. MicroStrategy. All they do, listen to this, right? Just to give you an idea, this is the CEO, Michael Saylor, is the longest serving CEO of any technology company ever. He's been around, I don't know how many, 20 plus years, the CEO of his company. And they had a meeting with the board, and they've decided the future is Bitcoin, because they've got their profits in their bank account and they're making 4%. So inflation is higher than 4%, so they're losing money. So their profits are losing money every single year. So they decided as a board, they are going to put all of their profits into Bitcoin. But not only that, they have gone out into the markets and they have borrowed, they've done it again recently, around $4 to $5 billion worth of money. And what have they done with that is they've bought Bitcoin with it. So they bought around $4 to $5 billion worth of Bitcoin. I'm telling you, they're hoovering it up. There will not be enough left, which is why I'm scrambling around to get as many as possible, because it's hard money, which is really funny when talking about a kind of a digital currency, isn't it? But this is really hard money because it's getting harder every single time. There's less and less of it. And he's made around 4.5 billion profits. So he pays next to nothing on it, but is buying into an asset class. But though I didn't mention this, which I did, I think, when I was on stage at the IX exhibition, which is that since inception, Bitcoin has averaged 150% a year. And sometimes more, sometimes less, but on average, that's not bad. I mean, 150%, I mean, that's not bad, So, and that's why it's very simple. He said, okay, 150 on average, 5% in the bank. 5%. He's a smart guy, went into the markets, borrowed so much money, and he might well be in the next 2 cycles, not in the next cycle, but the next cycle, one of the richest men in the world. Yeah.
I mean, it seems to me that, I mean, we did a cryptocurrency show in London in 2018, just as it was coming out and having that tremendous rally. And, a year later, of course, it seemed like the bubble had burst, and half of these companies that exhibited at the show were just gone. But
I'm assuming they were startups, were they? Is that what they were, or what were they?
Startups and new coins and things like that. But the other half are still
Stick to the
around.
top ones. Stick to the top ones. Yeah.
Yeah, and
There's
it's
enough volatility, Simon. There's enough volatility. I mean, how much volatility do you need? You know, Bitcoin, when it goes to that fourth year, which is likely to be the end of next year, right? End of 2025. So we've got time for this next third year, but then the fourth year, you want to be out. And that's why it's also so important to know what you're doing, because if you don't know, you're going to be, caught. So I can't remember what I was going to say, but yeah, it's important to
I mean,
stick to the
the
big
point I
ones.
was going to make was that it's now maturing, and it's achieving that because of the ETFs, because the institutions that are now bringing it on as an asset class. It's a whole new sort of sphere of as
Absolutely,
an asset class.
absolutely.
One or two questions, Marcus, if we can.
Yeah.
Let's go back to Stephen Cassidy. Says, please can you explain the rationale again for the first entry, the entry after 4 consecutive lower months? And
Yeah,
I think
so
this.
the rationale behind that is just simply I need it to have fallen a certain percentage since a recent high. So we look at the 1 year chart, we look at what is the most recent high, and in a bear market, it would be minus 30%. In a kind of a sidewaysy, what I call the buffalo market, it would be minus 20%. But in a bull market, I'd get in if it falls just 10%. So if it falls at 10%, boom, I'm in.
Paul was saying the value will go up. That's right. Madeline, fantastic information. Carla, what about Bitcoin ETNs? Would it be a good
Mm.
opportunity or better to invest directly?
I think it's better to invest directly myself. And the reason is because if you invest in an ETF or an ETN, which looks like it's coming to the London Stock Exchange, an exchange traded note, it means that, again, by investing then, you've given your money to a third entity, right? It's not like you buy it and they send you the Bitcoin. No, no, no. This is like a fund. So you send your money, they buy the Bitcoin, they'll hold it for you. Lovely. So if anything happens, you don't have it again. No, no, no. The whole point of decentralization is that we don't put our money. And by the way, you're putting your money with the biggest asset manager in the world, right? Talk about centralized. BlackRock owned the biggest ETF, so people are likely to go to there. No, it's supposed to be decentralized. You go onto an exchange, that's what they call the brokers, exchanges, and you'll buy your Bitcoin. Now that's real Bitcoin. And then you will transfer from the Bitcoin address that you have on the exchange to your wallet, which will be a Bitcoin address. You make sure it's the same one. You look at the beginning, you look at the end, you look at the beginning, you look at the end, you go, yep, that was it. You send a little bit over, right? After a couple of minutes, it's arrived. So you go, yep, I got that right. And then you send the rest over, and that is now yours. And there ain't anyone who can take it away from you. That's important. That's important.
Um, the Saturday, will there be a chance to watch the recording of Saturday's 6 hour session? I'm in a golf match final. Well done, Chris. Fantastic.
Oh, wow.
Can't attend live.
Okay.
If Chris registers,
If you gosh, that's a good one. If you download, you got to scan this. Don't take a picture, right? People take pictures. It was quite, we had to tell some people at the IX, oh, don't take a picture. So go and hold your camera, boom, click on the URL, leave your details, and then we will send you information about this Saturday. Once you are enrolled on Saturday, if you can make it, great. If you can't, then I believe there is a recording of it, but it'll be a shorter one. We'll cut it up a little bit and we'll play a 4 hour version of it. Then we'll play it live, by the way, but it's recorded, if you know what I mean, because we don't believe in just sending recordings. So what we will do is we'll play the Saturday afterwards a recorded version of it with my team answering your questions live. Does that make sense? I don't know whether I explained that very well. Because we just believe that, you watch something and then what? Like I've got a question. So my team will be on there. So yes is the answer if you
great.
give your
And
details.
by the way, the big green button at the bottom where it says download the Lunchtime Investor Free Guide, that's the same link. So you can hit that, it'll take you to the same as that QR code link. And
Right.
you get the free guide. I'm looking at it now. It's good.
Perfect.
Andrew James, instead of only watching graphs when deciding to buy or not to buy, do you also look into why a coin has risen or fallen? So do you look at fundamentals, Marcus, as well as technical, really? I guess.
Absolutely. Now, there are less fundamentals here than there are on a company. It's an unregulated industry. They don't have to, but there is more because there's online data, on-chain data. Remember, the blockchain is actually a huge database. And so you can actually see exactly what's happening. So in a way, you have a less data from them, but you have more data about what's actually happening, number of transactions, what they're actually doing, etc., and so forth. So yes, we do, and you need to just learn it because it is a whole new world. It is not the same. They do not have PEG ratios, PE ratios. They don't have any of that kind of stuff. They don't have 5 years necessarily worth of accounts that you can look at. So it is very different. And that is why I say, generally speaking, when you start off with, just stick to the top ones while you learn how to do it. In your crypto club, you'll see on the top right-hand side there, your crypto club, that's where we teach you all of this. It's a 1-year program. There's like 7 things in there. There's an online club, there's weekly calls, there's during the week 3 times you get to talk to my team. You have a Telegram group of what we're getting into. There's a whole load. There's a Facebook group, a whole load of stuff that we do. We are busy, I tell you, helping our clients, which is why 88% of them are successful. And that includes people who received the poll and just said, well, I've only just started, Marcus. It's my 2nd day, so no, and said no. So we didn't do a good job there. We should have just sent it to the people that have, been in the club for a while. Yeah.
Fantastic. Question for me, do you need to know much about cryptos and coins and tokens?
You could argue against it, right? You could argue. I mean, if you're investing, the answer is yes. If you're trading with a stop loss, then the answer is no. But then if I were you, because the volatility is so huge with cryptocurrencies, so I think the only way to really trade it properly with a stop, for me, trading is something with a stop loss. If you're not using a stop loss, it's not really trading. So if you're using a stop loss, the only way I would say that you do this is you do a breakout. Like you see it moving in that direction, you jump on the train and you hold on, and it can really go up. But then the whipsaw comes pretty fast. So yeah, that's the only way I think. Then you don't need to know about it. No, of course you don't.
Fantastic. Thank you for answering the question, says Andrew.
Very welcome.
Great. Okay. Any more questions? We're over our hour, so we should probably wrap it up.
Yep.
Mark, thank you so much.
Real pleasure. Thank you, and I look forward to helping every single one of you. I just love to help people who want to be helped. That's my thing. Okay. So thank you so much, and thank you, Simon. Thank you to IX, and thank you very much, and hopefully see you all soon.
My pleasure. Thanks for joining us, Marcus. Much appreciated. Thanks, everyone.
Bye for now.